Well, hello folks, I'm L.A. Little and this is your weekly TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened last week and what does it tell us about the coming ones. I do this show once a week every Sunday night, live at 9 o'clock Eastern Time and archived on YouTube under the channel L.A. Little. You can catch me there if you miss it here. As always, I appreciate your feedback, your participation in the show. If you want to participate, it's fairly easy. You can text me, 303-912-9110. You can send me email, support@tatoday.com. And if you're logged in, you can just type it into the chat window through live stream. Either way, always, I'm here available. Just again, tell me what you're trying to do, which direction, what kind of time frame. It helps me to help you. As far as these markets, in terms of what they're doing, it's up again. Back the other way, as they say. The markets held up last week after a little bit of a scare on Friday, but they did hold up pretty positive here on the NASDAQ and the S&P for the year. Still negative on the Russell, almost flat on the Dow. That's the way it shapes up on this mid-August weekend. Dow struggling, Russell struggling, but elsewhere still doing pretty well. Let's start with elsewhere, and what I want to start with is the S&P 500. The reason for it is it's the one that's kind of in the middle. It's not the weakest, which is the Dow and the Russell, and it's not the strongest, which is the NASDAQ and the NDX. So let's pop into that and take a look at what's happening there. The first thing you'll notice, and that we've talked about already, is that we have an ABCD structure that takes this thing up to about 1969. That would take it over the top of the breakdown bar if in fact it fulfills. The question will be is, can it get there and can it close there? Because if it did, it would close over the top of this bar. 1965 got to 1964 on Friday, less volume, went into that area, flipped around, came down hard as a result of the Ukrainian news that hit on Friday. Now what else is going on here is it's a retest regenerate off of this prior swing point low. So you take the top and bottom of that, more than 6 bars, 2, 4, 6, yeah, more than 6 bars. You come back into it, you get all the way to the top, which is not normally what you do, which tells you that's a little bit stronger than normal. Test into the top of it, can't stay over it, has slightly more volume as it does it. It has a lot less volume than this bar, but more volume than that bar. That kind of suggests, given the ABCD structure, given the top of this bar, and it didn't get tested completely, and the fact that you hit this retest regen zone with some decent force, that this thing is going to try to test it. And that is going to be the test. That's really the test. And if we go to the strongest of the indexes, and I'm talking about the NASDAQ and the NDX, and we'll use the NASDAQ as our focal point, swing point highs, you're going into those swing point highs, volume's expanding a little bit, but it's not any more than what was up there, but it is 2 swing point highs. If you get over it, you're going to break over it and you're going to expand this range. So far, the ideal has been is that this is a range trade. There was an ABCD structure here as well. That one actually completed on Friday. So that one's done. That's true on the NDX as well. If you pull over the weeklies and you look at the weeklies on this, you can see just consolidation taking place 6 weeks now at the highs. Tested back into the swing point high multiple weeks, 5 weeks in a row. Couldn't break it down. Flips back around, now is going to test that top and try to get over it. Volumes about equal, wants to test the top, and if I go back to the S&P 500 and look at it on a weekly basis, you can see you came down, you got an under, over, less volume, that leads to the bounce. Now you're coming back into the bottoms of these bars. That's the test, right? That's the real test. If it gets over them, this thing's going to highs. If it gets over them, that would mean that this NASDAQ is going to break out. So if you want to watch something, you want to know if you're going to go higher or not, Simply watch these swing point highs. Does it take them out and does it climb? If it does, S&P's going back to the highs. Russell, Dow Jones are going to get pulled higher as well. This is the driving force. This is what's moving this market. If they fell up here again tomorrow, then it's a totally different story. You're back into the range. You're staying inside the range. And it's going to be a range trade. And the range trade has been what's out there, has been what we've been looking at and thinking this market was going to do. Now it's a question of will it or will it not do that. Russell, ABCD structure attempt on Friday. It actually had the structure set up, but it couldn't hold price. That price point couldn't hold over it, falls back, right? That ABCD structure would take it quite a bit higher if it were able to do it, but so far it hasn't. And if you look at it from a different perspective, you're coming back into this area. This is the area that it's testing. Got up into it, couldn't stay over it, right? Back underneath it. That's a failure. Dow Jones, same sort of scenario as the S&Ps, in that the Dow Jones pushes up, does a big wide price spread bar, higher volume. That could test back into those highs from Friday. That low it was going into, 16,773, got into 16,775. You're doing 1.09. You had 1.3 there. That looks like you test in there and you failed. That's the domestic indexes. When you take them as a whole, I would think we're going to get some sort of a decision fairly quickly on these, and that's going to be either you stay in the range or you break out of the range. Now, if I look elsewhere and go over to Europe, for example, the CACs came back into the critical resistance area on the way back up. That was the intersection of these two heavy volume bars, goes back into them, fails on a lot less volume, right? That's a failure. If you look at it on the weekly, you actually had a break of a swing point low up here, led to a faster move. That was multiple swing points breaking. Now you have a break of a swing point low here, tries to test back into it, looks like it's failed, wants to go down and test this low. That's 40.80. We're trading right now at 41.74, so another 100 points down on the CACs, if in fact that's going to be the case. And if we look at the DAX, which is another weak market in Europe right now, the resistance zone, the heavy one, was up here. It couldn't even get to that. Got right into the bottom of this zone. Trades back around, right? This was the volume. You're going up into it with less volume. You don't have what it takes. On the weekly, you had the break of the swing point low here from April 21st. Volume is expanding. That says you're going to get 2 to 3 bars down. What do you got? You got 2 so far. Are we going to get number 3? If we do, it's going to be a test of this low, 89.13. We got as low as 89.03 once before. Didn't have the volume. Looks to me like it's going to try one more time, and that's going to be the key test, because if you break this one out, then you're going to have broken 2 swing points on the intermediate term time frame, and that definitely is going to change the trend in the European markets. Now, the FTSE has been stronger than the others, but even the FTSE is infected with the problems there. You see it come over this April or August 1st high. Top there was 67.30. You get over this bar, you trade over it, you have a lot less volume than what you had there. That's a failure as well. That one wants to come back too. So the real question has been, what's going to happen with Europe? We knew Europe had problems. Now they have more problems because of Ukraine. Are they going to drag the rest of the world down, or at least keep them down? And right now, the way these three are set up, they look like they're going to try to trade lower tomorrow. I suspect that's going to make it hard for the rest of the world markets to trade much higher and stay much higher. In other words, leg higher. Now, if you look at the strongest Asian markets, the Hang Seng, of course, the strongest over the top. It is a doji suspect breakout, but it did break out, and it's over the highs. If I look at the Hong Kong 8 shares for Chinese Shanghai, Can't get to the top. Looks like it's going to try to test up there one more time, but that one's struggling to get over the highs. Elsewhere, not nearly as bullish as those two. The Japanese index, pretty strong, has been, but is hanging there. Had a big bar down, just an inside bar last week. Let me go back and show you the 8 shares again on a weekly basis. Here's that way that one looks, testing up into resistance zone. Wants to get into this big bar's top, but can't quite get there yet. It does look like it's going to try to give it a shot. Does have an ABCD structure if it works its way higher. Brazil, this one's been interesting. I thought this one was going to break down, flips around, goes all the way back to the top of this range. It's really got 2 ranges there, and just like us, it's at the top of the range now, trying to get to the higher one. That will be a test as early as tomorrow. Elsewhere, not much else happening. If I pop over and look at the auxiliary markets and use that as one last proxy to try to give us a clue as to where things are going, one thing we'll notice very quickly here is that the euro just can't get going. It's tested. It does want to try to climb a little bit higher up into this bar. The low there's 132.25. We're trading at 132.11. Got as high as 27. That does look like a failure as it tries to push higher. Looking at it on a weekly breakdown of this swing point low, 2 to 3 bars lower. You've already got that. I wouldn't be surprised at some point here to see this thing come back in, try to do a retest, regenerate higher. It's going to be difficult to get much higher though, and typically if you come back within 6 bars, you can make it to the top. But this one's so weak, I do think it's going to struggle to get back up there, to get that high. Maybe come back in and test the low of it. And a lot of that is just the fact that it's pretty clear Draghi and others want that currency market to continue to sell off. That's one way to make your goods cheaper to the rest of the world and to get some sort of strength on exports, which what seems to be the European motive now, just like it has been previously for Japan, for China, for us, for others. Competitive currency devaluation over and over again. Dollar hanging at the highs. Silver and gold. Silver really couldn't get anything going on Friday. Gold tried to lift, kind of got pulled back in by the end of the day, just as the markets flipped around and went higher on Friday. Gold had popped up on the news of the Ukrainian situation, and then it fell flat by the end. It's going to come down here and test again. Still testing this big range is what gold's doing. Okay, so summary-wise, for the first 15 minutes, give you my summary. It looks to me like we've got a range trade for the most part. Europe probably going to hold us down, and Asia is going to try to pull us up. Our markets have been what many would say are resilient, which kind of leads me into the second half of the show, and I want to talk about sentiment, resiliency, stubbornness, things of that nature. They are a form of technical analysis. I don't really pay all that much attention to them, but there is a psychology to trading that one must recognize, and that is there are times when it just really doesn't matter what the charts say, or not so much what the charts say, but what the fundamentals say. Sometimes the market has a mind of its own, and you don't have to go back that far to see it. I mean, if you go back as recently as 15 years ago in the 2000 or the 1999 bubble, it was pretty evident that this market was going to do whatever the heck the market wanted to do, and that thing went farther than anybody would have imagined before it finally gave it all up in a spectacular fashion. 2006, it was almost the same story, the same sort of a sprint to the finish line, but that sprint was continuous. It never stopped. Well, fast forward to today. What are we doing now? I want to pull up a monthly chart, and I just want to talk a little bit about the psychology of this market right now. Now, there's many of you who still probably, I'm sure you grew up on classical TA, and you draw in these trend lines, And there's a spectacular trend line here. I mean, that's, you know, that's even better than 45 degrees. You know, if you're using Gantt's measure, it's about 50 to 55, it looks like. Pretty steep, steady ascent, right, without any major pullbacks. And that's been going on now since the bottom in 2011. That's a pretty significant move. You've had some pullbacks along the way, but again, every one of them has been bought all the way up. What happens when you get that kind of scenario? And you know, you can count them off here. You got 1, 2, 3, 4, now we're in number 5. An ascent of 50, 55 degrees cannot last forever. Now, it can go parabolic. In other words, we could get just a straight up type move until it just blows off. That's not normally what happens. Usually what happens is you get some sort of degradation where people all of a sudden realize that the market can actually fall. And they start to think twice about it. Right now, there is no fear. There hasn't been any fear in this market for 2 years. I mean, it's been at least 2 years since we've seen any fear. And that 2 years would take you back to this little time period in here. That was the last time we had a correction of size. I mean, if I take this one, 1422, we went down as low as 1266. So you took 160 points off of 1462. That's a 10% correction plus. That's the last time we've had any correction of real size. That's the last time we've had any real fear in this market. But even if you look down here, you can see that the fear level, as measured by volume, really wasn't that significant in this time period. You know, you didn't see a huge escalation in volume on a monthly time frame. Nothing like you saw here, certainly nothing like you saw back here. That, folks, really tells you that you haven't seen any fear since this low. And that low was 3 years ago. You know, 2.5, 1, 2, yeah, it's 3 years. 3 years ago. This market is going to put fear back into people when there is no fear, and there is no fear right now. Now you can move to other indicators like, you know, the AAI or some of the others that are out there that give you measures of, you know, bullish, bearish sentiment and all of those things. And yeah, they have some value, but they're not timing tools. You can't time them. To time a market, you need to look at swing points. You need to look at how the market attacks those areas of support and those areas of resistance. So in this case, as we come into support, you know, you got a clear indication that it's not quite ready to break down. You get an under over, right? A little doji. That says you're going to bounce. Now the question is, what do you do on the bounce? Do you get higher or not? If this fails to get higher, and if we pop over to the daily, if we fell at this level, and if we come back and really, if we break these lows, then you're going to see some fear. But not until then. This market has no fear. The only fear that's out there is missing the next move up. And folks, that's a dangerous situation. It's okay to be a little bullish. It's okay for the markets to go up. It's not okay to get to the point where nobody believes it can go down. Because as soon as nobody believes it can go down, it probably is going to go down. You know, and I know that that sounds kind of, you know, hokey, but that's the way it works. When the fear subsides to the point where the margin interest is as high as it is now, where there's only talk of buying the dips, when everything you see suggests that you're wrong unless you're long, that's when you know it's time to be a little bit more careful. And that's why I think that we should continue to view this as a range trade until we find out that it isn't. And that would be my suggestion to you on this late Sunday evening. All right, let me see if I got any questions here and try to take those if there are. And then do anything else that I want to do in case there isn't. So let me see. Questions in the room? No. Questions via email? We got one there, so we'll take that one. And then let's see. Questions via text, and I don't have anything there. All right, so let's deal with this one first. Okay, so there's a question about. Looks like CMG is what they're asking about. So let's pop up CMG. Let me put it in right quick. So CMG, of course, is Chipotle. And Chipotle, of course, has been as bullish as they can be. And the question is it a buy on an intermediate term time frame? So let's pop to the intermediate term time frame. And is it a buy here? Well, we just had a huge spike up on earnings over a swing point high. So the first thing I would do is say, okay, where can it retest regen to when it finally does? And more than likely it's going to be 6 bars before it does, so it's going to be this top. So if I look at that and look at this high here, that price point is 62.23. So that would be my first thought, 62.23. I would also look at it just for grins on the monthly just to make sure that the monthly seems to be in congruence with everything else, and the monthly actually looks pretty good too. So now let's pop back to the daily. 66.23 was the number. That's back down and about halfway in. When you get a big spike up like this, that typically sets up some sort of a range trade. But this, of course, didn't have a wide price spread bar, so the range trade in this case had to be a smaller one if it was going to be. Well, it didn't. It traded over and it's been holding above it. As a matter of fact, you could probably draw in another range now and say, hey, it's expanded to the top of the range on the top side. So now the test is going to be here on the way back, and that's the high of the breakdown of the breakout bar, 67.90. The low of it, 649.27. So what you have to do is let it come into this price zone, 667.90, and see if it can break down. If it does, then you're probably going to get it at that low. That would be the first test. That's where you have to try to buy it on an intermediate term time frame. So I would simply let it test into that, see if it wants to test a little bit lower, get to that low end. It probably at some point before it goes substantially much higher will test into this area one more time. I don't know if you'll make it to the 649.27, but I wouldn't be surprised to see you get into about 652 or so. That would be the place I'd be looking at it. I'd also, because you're looking at it on an intermediate term time frame, I'd also be looking at it as potentially coming back to test this high. That's about 623. So you have to assume it can get there and assume you're going to buy more if in fact you start up here. That's the way I would treat it. Okay, let's see what else we got. Anything else? Nothing else. Okay, so let me turn my attention to something I talked about last week, and I'll come back to the theme one more time. And that is that, you know, the best trade on a short trade is simply to pick on something that's the weakest. You could pick on the Russell if you want to pick on an index. You could pick on the XLE if you want to pick on a sector. But you've got to go find something that's weak. XLE continues to be weak. ExxonMobil, largest weighting in there, still weak. Did get a little flip around, could trade a little bit higher, but these are all struggling. If I look at CVX, it's doing the same thing, struggling. Looks like it wants to test the lows again. If I look at Halliburton inside that, also looks like it wants to test lower before it's over. ConocoPhillips also hanging down there. All of these look weak, and that doesn't even begin to count how weak the OIH looks, right? That one keeps testing to the bottom. Still hasn't tested that low yet. 52.85, got as low as 90. That looks like it's going to trade lower. So if the oil sector is going to trade lower, XLE is going to struggle. That means you can go over to something like DUG or simply short the XLE and buy in here, which is a double short of that sector. That's the sort of trade where I would think that if I'm trying to spread trade or even speculate on this market coming back in, that's the way I would try to trade it. I wouldn't short the strongest things out there. I'd find for the weakest things. If you're going to buy something, you buy the strongest. If you're going to short something, you short the weakest. That's really the way you have to trade these things. That's really the way this is set up. All right, I'm going to leave it at that. I appreciate you joining me. I'll see you next time. Until then, I'm LA. This is and was your weekly TA wrap. Have yourself a great night. I'll see you tomorrow. We'll see how that test fares for tomorrow. I think we'll get the test either failure or breakout as early as tomorrow, Tuesday at the latest. Remember, we had options expiration on Friday. We could see some hangover on Monday. See you then. Good night.